Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq. Joining me is Jason Ader, CEO of SpringOwl Asset Management and 26 Capital Acquisition Corp, to discuss if investors are ahead of themselves with cruise line stocks. Jason, it's great to meet with you. Welcome to Trade Talks.
Hi, Jill. Good to see you.
Why do you think assuming commerce lie ahead is wishful thinking at this point when you look at the cruise line stocks?
Well, there's no question. In fact, I was just by the port of Miami today, and there's just about eight empty ships lined up, ready to go. And, you know, it's a bit startling to see. There's no doubt there's going to be pent-up demand by the cruise customers to get back on those ships. But the price discounting is just incredible, whether it be Royal Caribbean, Norwegian, Carnival, even Disney. Not only is there significant price discounting, but the incentives are also significant. And I just don't see that changing. In fact, I think, you know, the demand that we're all expecting, this roaring 20s of travel, that's real, and that's going to happen. But it's going to happen at very discounted prices. And it's going to take quite some time to come back. And you have very competitive markets to the cruise industry, like Las Vegas, like Orlando, which will be discounting midweek for a very long time, because midweek was the business travel conventions meeting market. And that's just gotten very efficient, you know, on Zoom. And companies now are making their employees write return on investment analysis for business travel. It's pretty incredible. And so we've changed the way we travel for business. It's creating excess supply in the leisure markets. And while I do expect there to be significant demand for the cruise industry and other leisure markets, it's pricing that's going to struggle. And in the backdrop of the pricing issues, it's going to cost a lot more to handle the customers. And that's air filtration, that's surface wipes, that's just, you know, spacing to protect the customers from, you know, COVID and any other germs. As we all know, the cruise industry has had its challenges before COVID.
Right. Look, the silver lining to the pandemic can be, whether it's cruises, airlines, commuting trains, that cleaning is a good thing and should be factored into operations, regardless if we're in a pandemic or on the other side or not. So hopefully that's a permanent change that they're making. But I realize the market's a discounting mechanism. This conditional sailing order remains in effect until November 1st, 2021. I mean, that's still kind of a bit of a long runway before you even get some semblance of normalcy.
I know it's really unfortunate, but I do think, you know, to some extent it's needed. And there are people who are leaving the U.S. and there are other countries now that are allowing vaccinated cruise ships, and that's a good thing. And let's see how that goes. You know, there are already reports in today's paper that people who have been vaccinated are somehow being reinfected. So it's very early. It's a very conservative position. I think we're all hoping for the best, but these companies, you know, to survive the pandemic period, have sold equity, raised debt, significantly changed the cap structure to survive this period, yet most of them are pretty close to the all-time high valuation. And that means they're discounting a very quick return to profitability. And for all the reasons we just talked about, I see demand recovering, but it will take some time for pricing and velocity to catch up to the level that profits could even approach, you know, the 2018, 2019 levels.
So when we think about the future and what it holds for shares of cruise line stocks, perhaps they're running more lean, right? And that's a good thing, because that's going to have to, you know, catch up with demand. It's going to have to catch up with their pricing power, as you had mentioned. So what does it look like 3-5 years? Or the model's just going to have to change and we won't see those kinds of prices in the stocks for quite some time?
Well, I mean, the interest rates are so low. There's just a lot of parts of the tourism economy that are discounting very positive. I mean, pre-pandemic valuation levels, in some cases more. Look at the airlines, look at Las Vegas, look at hotel companies, hotel REITs, theme park companies. I mean, there is a lot of positive news that's discounted into the stock prices. And I'm hopeful for a recovery like you are. And I think everybody watching this wants to get back out and travel and do what it is we used to do. The cruise line industry is one that's really straddled with much more challenges because of the amount of competition for that leisure customer, because of the excess supply in leisure markets due to the lack of business travel and meetings and conventions. And add to that, the cost of cleaning was just never a factor. I mean, we used to like to think the places we went were clean, but they're now taking it, and it's long overdue, to a new level. And that will benefit us all, but there's added cost to that. So the way we figure it is that revenues need to be almost 20% higher than the 2019 peak in order to catch up to profitability, because the cost of carrying a passenger is going to be greater as a result of it will take longer to prep the ship, and it will cost more to prepare for the next customer.
All right, appreciate the insight. Thanks for joining us on Trade Talks, and thanks for joining me. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.